Hello traders, Gary Wagner here for Trending Markets. 21st day of August 2015. It is Friday. Happy Aloha Friday, as we say on the islands. Not such a happy Aloha Friday for equities, though. Tremendous, brutal sell-off today. Dow Jones Industrial Average off over 500 points, 530 points plus to close at 16,459. Take a look at this chart. This is our daily chart. You can see the carnage over the last 3 days with absolute acceleration to the downside. Today's candle, yesterday's, of course, this being Wednesday's right here. That was the last day that we saw this market anywhere near or above 1750. Tremendous, tremendous sell-off, as we said. Now, traders, the key, this is the S&P. Off almost 3%, or call it 2.75%, below 2,000, 1969. Incredible sell-off. Now, this is a chart we've been looking at over the last couple days, and we talked about the fact that this is going to be really what we want to look at in terms of a warning sign for a potential real sell-off in the market. This is a 200-day moving average. It is the average that the majority of traders out there utilize to determine if this market is on course, because the feeling is that genuinely, as long as we're remaining above this line here, this 200-day moving average, even with a couple of dips like we saw right in here, the market itself is sound. A 200-day moving average is a very, very long-term moving average. We talked about the fact the other day that we broke through that, and that being Wednesday, because you can see right here, here's where we got the market closing at the 200-day moving average. The following day, meaning yesterday, just trading below it, and then it was off to the races. This market has absolutely plunged. I've gotten many reports from traders in trending markets that they took my advice. As I said, that I believe we could see some real selling in here and initiated short positions or protected their equity portfolio with S&P puts. I commend those traders for their action. Now, we didn't put out an official sell signal in this market. The only thing that we are officially short right now is crude oil. Crude oil did plunge today, actually trading below $40 a barrel, but closing above it, off a little bit over 2.5%, off over $1, closing at 40.23. Now, the high today, 41.40, the low, 39.86. So we've absolutely seen this market actually begin to trade below that $40 mark. As I said, my initial target on this is 37 to 38, but I think it has the ability to go to 31, 32 if we see some continued pressure and real gluts in terms of the supply side of this equation in the markets. Now, one of the things that you realize is we talked about in trending markets that the deciding factor, what's most important to us, is to identify these markets that we believe have an incredible opportunity to sell off and or go up, but go up in protracted, extended trends. And we've identified this trend in the crude oil market as one of those trends. Now, before I go ahead and really uncompress this chart, I draw your attention to our point in time in 2009. Market is trading at $140 per barrel in crude oil, plunges dramatically throughout up until the end of the year, and then bottoms out, really bottoms out come the beginning of 2009, but sells off in 2008. Now, why is that important? Well, quite frankly, there is a seasonal tendency to the use of oil, and typically between the end of August, September, October, November is when the use of oil is the least in terms of utilization. They're not using it for heating oil yet. And that summer driving expanse is over, so to speak. And that's why there's a tendency for the market to bottom here in January. You can see January, November, and December in here where we get this bottom action back in 2009. Now, the reason that that's important to me is because we're in August. Let's go ahead and blow this up. And we can see a couple of really noteworthy items. First of all, take a look at this most recent low that we hit. And this is the one fib retracement that I had in there as we were looking to see how it would react. We've definitely broken below these recent lows that we got back at the beginning of 2015, because that's when the market tends to bottom. As you can see, as we go into the end of the year, that's when we're going to hit our lows. We'll get some sort of a bottom at the beginning of a year, and then the market tends to move up from there. Now, we're in August, so as we go through and finish August, I expect us to get another month, September, lower pricing, October, lower pricing, and some sort of bottom action come November. And so it is for that reason and the supply-demand scenario that we currently have that lends me to believe that we will see lower pricing on oil, breaking below 40. As I said, my initial target is 37. Now, as you can see, I have converted this Japanese average into a standard candlestick chart. You can really see how we hit these lows down here at about 39. So my recommendation for trending market traders is to maintain our current short position, which is at 41.87. Maintain our current stops. We will look to tighten those stops on Monday morning. This has been Gary Wagner for Trending Markets. Have a great weekend. We'll talk to you on Monday. Bye-bye.